Hello everyone, coming to you today on a cliff edge on the eastern coast of Australia, which seems appropriate as retail sales in July for Australia were zero growth. That's flat retail sales. Now, to be fair, the previous months were up 0.5%, 0.5 and 0.3 or 4 before that. But before that was another stark negative month for Australia's retail sales. So over the last 6 months, Australia's retail sales have been pretty much, or over the last 8 months, pretty much flat. I think it's up 0.2% for the last 8 months in total, which is terrible. And really speaks to what I've been warning of, which is an Australian recession, a recession we do not have to have, driven there by the Reserve Bank of Australia, because it's not even about whether the Reserve Bank of Australia raises rates again, which they've said they want to, which is sheer insanity and just smacks of no economic credentials whatsoever. But they should have already cut rates 3 times. So we should already be 75 points lower than where we are. And it would have made no difference at all to inflation. Everyone, the economy would be getting a soft landing and gaining some inner strength, if you like. So retail sales flat over the last year or so. I think probably the average is about 0.2% a month, which is not good enough, but not a disaster. So it's just important that retail sales hold up now throughout the second half of this year, at least the third quarter, but I do see continued softness. And just remember, with that retail sales data, that's aggregate data, and it includes all the top end spending. And we know the top 10% of Australians are doing very well. They already own property and shares coming out of COVID. So the wealth gap has grown significantly in Australia, the top 10% versus the other 90%. And I suggest to you that aggregate retail sales data is really more about, the top 10% spending up big, while the 90% of Australians barely struggle to make ends meet. So it's disguising, if you like, just how bad the Australian economy is for the great majority of Australians. Now, that said, in reference to the property market, we're seeing the idea that Michelle Bullock, the governor of the Reserve Bank, is talking about another rate hike and how she wants to hike because inflation is all that matters. And we did see that firm inflation number for Australia. But I don't think, I think she does want to hike rates, but I don't think she will be able to hike rates and maintain face and credibility, which is really bizarrely what they're all about, but fails so dismally to achieve. That the retail sales data, the manufacturing data, the housing data, the building permits, all this data is saying you cannot raise rates. To a year 11 economics student, you cannot raise rates is pretty obvious. So I think despite the RBA's talk about raising rates, there will be no further rate rises in Australia. However, her talking about rate rises is good for property buyers because it means that property sellers are getting nervous. They've seen the market go soft in some areas of Australia. They've seen it remain strong in some areas of Australia, so they're a little unsure. And then on top of that, you've had the RBA talking about it will still have to raise rates regardless if inflation is strong. So they're thinking they better hit the bid, basically. So it's been a pay the offer type property market. You had to take whatever price was available. It's turning into more of an equal balance between sellers and buyers in terms of sentiment and emotion, which is, after all, what drives human beings. And we like to think we're logical creatures. We're emotional creatures that justify with logic whatever we've emotionally decided. So what I'm trying to say, in a nutshell, is that sellers are going to hit bids. So if you're bidding for a property, you are likely, and it's a good, decent bid, you're likely to have that offer. It's called an offer in the real estate market and financial market, it's called a bid. You're likely to have that bid hit, which is good, which means you as a property buyer probably don't have to chase prices anymore, and you can start to buy it where you think is reasonable in this market, and maybe a touch above, because there's still a lot of competition to buy. It's just that sellers are more nervous now. So it's kind of a favour that the governor of the RBA is doing for property buyers at the moment. So there are real opportunities out there, and again I'd say to you, need local expertise, and again I would suggest to you, obviously sponsored by propertyclub.com.au, and there's all sorts of advantages there. There's properties there that you only get to see if you've signed up as a Property Club member, and they are all well researched properties before they even go on their list, if you like, of what is available. So their research in terms of the individual property, the region, the infrastructure, the access to transport, hospitals, all sorts of factors go into what Property Club selects as a good property to purchase. It is a great first port of call for anyone who's interested in property markets and already invested in property markets, because there's a whole range of expertise on the tax situation of property purchases and how to manage those effectively. So I highly recommend propertyclub.com.au. Getting back to the overall market, the economy will slow. Again, I won't go into it in detail this time. Immigration is going to be a strong supporter of the property market. The top 10% of Australians doing extremely well. The tragedy of the growing wealth gap does mean that property prices will continue to be supported, and property remains a good opportunity if it's well researched and well resourced. So I wish you all the best with that. Have a great day. It's a beautiful day here on the eastern seaboard of Australia. Thank you.